Hello traders and welcome to OptionsXO's New York Session Market Review. It's Monday, May the 9th, and it's going to be a bumpy week if this morning's headlines are any indication. The week actually began last night with mega pundit Peter Schiff telling CNBC's Squawk Box that the US is about to default on its loans. Earlier last week, presidential candidate Donald Trump let slip that he would renegotiate the nation's $19 trillion debt, an indication, said Schiff, that the US Fed couldn't afford to raise interest rates. Schiff has often warned of the growing assets bubble so obvious in present index levels. On Friday, the S&P finally broke through support at 2043 and bounced at 2036 as speculators purchased short-term bargain calls. Last week's numbers show a definite weakening in the US labor market, but the news failed to dent the week-long rising dollar. The next early morning call came today from China, where stocks fell on hints that the government may start limiting monetary stimulus and stepping up reforms. The Shanghai Composite closed 2.8% down, and in Shenzhen, a 3.6% drop was recorded. China yesterday reported a 1.8% decline in exports and an 11% drop in imports. Overproduction continues to hound recovery, and oil imports rose 7.6% last month over the previous year's reading. In Japan, the Nikkei this morning closed up 0.7% as yen futures continue an unsteady downward march that began early last week. Minutes of Sunday night's monetary policy meeting show a growing tension between central bank Governor Kuroda and several board members over the bank's negative interest rates. Policy remains unchanged, though, after indications of a recovering economy may be in place, with this morning's labour cash earnings showing a twofold increase over February. In Europe, the Greek parliament has passed austerity measures, including pension reforms and increased taxes, in spite of widespread public protests. Meanwhile, the Eurozone's Centix confidence measure edged up slightly this morning as factory orders in Germany tripled from minus 0.8% to an increase of nearly 2% for March. The rise was thanks primarily to orders from outside the Eurozone, while domestic orders actually fell. And in England, as Thursday's monetary policy meeting approaches, The Guardian reports that at least one policymaker may vote for an interest rate cut. Housing prices reported Wednesday fell on new purchase tax, and last week's PMIs all came in worse than expected. In commodities, WTI futures rose above Brent for the third day in a row as the US's major oil supplier, Canada, cut output due to the continuing fires in Alberta. Gold this morning fell on a strengthening US dollar, and copper was down on weakening data out of China. Still ahead today, a report on labour conditions in the US at 2 p.m. and retail sales from the UK at 11:01 p.m. GMT. At 1:30 after midnight, producer and consumer price indexes from China. We'll see you tomorrow just before the London session begins. Meanwhile, happy trading.